Greetings, everybody. This is Jeff Scott. This is my weekend review for the Sunday, November 21st, 2021. I titled today, For Whom the HINDY Tolls. We'll talk about the HINDYs that we're seeing. My email address, hgsidoc@gmail.com, for any comments or questions. I'm on the road, and this will be more of a 2.5K, not a 4K video. As always, it's for education purposes only. I'm a doctor, not a broker. I'm independent. I pay for the tools that I use. And trading involves risk, and you alone are solely responsible for any decisions you make. I'm not going to have much time today, so I'm not going to spend much time here except to say it's up to you to learn. Find smart people. These are some of the ones that I found. Put it together and become your own guru. I own a lot of different software, and I keep forgetting to add wealth charts. And I had a mea culpa that I'm just going to call out right now. I thought that this week was a wealth charts event. It was a ITP, I think is what he calls it, from Rob Hoffman, indicator event. Now, I did tell people what I thought the price would be, and since it wasn't a wealth charts event, it wasn't that price. I did talk with Rob, and I'm expecting to get a link so we can honor the price that I thought it would be. And when I do, I'll just post a note. But in the meantime, if you're interested in wealth charts and you tried to get it this weekend and it wasn't the price you wanted, just text me or email me rather when I get the link from Rob. I'll send it out to you. If you check me during the day, you'll see TradeStation, Thinkorswim, and wealth charts. I use Hgsi, EdgeRater, Q Tools, Dr. K Tools, and John Person Tools are all incorporated in the different packages. Here's a website for Hgsi under free 30-day trial, no credit card required. Under investing strategies, you'll see hundreds of movies like this. Stock patterns are cyclical. Sure feels like we're going down. Now, I want to point out, and this is for CanSlim stocks in general, not just high growth stocks. These stocks will fall like rocks. If the market goes against you, don't go heavy into high growth stocks. If the market falls, these will fall harder. Wait to buy them cheaper. Now, every time it's looked like we've entered stage 4 of fear, we've seen a big rebound. So we're getting close to oversold, and maybe we will see the holiday run. But we just saw a bunch of HINDYs, and that's got me a little bit concerned. So what did I do? I raised cash, have smaller and less positions, sold a little premium as I'm sitting here thinking that this could be a rough patch we're going to. But I'm going to be nimble, and if we bounce like we have before, then I'll be ready to take advantage of that. If we look at the sectors on Friday, you could see it was a rough day. Look at financials. All right. Interest rates fell. Financials got clobbered. Real estate, clobbered. Healthcare, clobbered. Energy's been clobbered. Just a very weak period in the market. I'm just going to stick here in the essence of time. Here's weekly of the major index futures, E-mini, NASDAQ, and Dow across the top, Russell, VIX, and dollar across the bottom. We are either within days on the E-mini and NASDAQ, who set new highs on Friday. The Dow is now back a couple of weeks, as is the Russell. So clearly we've been in big uptrends. And frankly, the E-minis and the NASDAQ still look very strong and look in short-term buy signals. The Dow futures are in a short-term sell signal here and have dropped below their 17-day. The Russell broke out of the box, and to me, it looks like it's come back to retest the top. So I'm not done with small stocks, but they better turn around quick. The VIX moved up and got above the 200-day moving average, and the dollar's been strong, which is not good for my stocks. If we look at the weeklies, again, despite the negative feeling we might have about the markets right now, you could see the E-minis at all-time weekly highs, NASDAQ futures all-time weekly highs, sort of a low-close doji setup on the Dow futures. It would not surprise to see them come back on the weekly and hit the 17 weekly. The 50 weekly is quite a ways away, and that would be painful. The Russell clearly has broken out of the Darvas box. We'll see if the retest holds. And we could see the VIX remains relatively low. And although the dollar is strengthening and it's had a big move off the bottom, it's still way off the prior highs. The expected moves, the E-mini stayed within for the week. Interestingly, the NASDAQ stayed within and actually broke above and closed above the expected move, which is not expected, which is not really expected because 80% of the time it'll stay within, but it broke out on Friday. The Dows traded to the bottom of the expected move, but stayed within. The Russell broke down below the bottom of the expected moves, as we clearly saw small cap weakness this week, I think down about 2.9%. The VIX stayed within the expected move, and the dollar strengthened, getting above its expected move. So we have 3 of the 6 break above their expected moves or below, which is unexpected when only 80% of the time would you expect any one to do that. As far as long-term trend lines or trend channels, the spider is in the center. The Qs are trying to get back in. The Dow is traded down to the bottom, and here's the Russell trading down to the top of its starvest channel. So where it sits right now, it'd be an interesting week in this market, to put it mildly. Now the Q tools are interesting. Here's Dow, NASDAQ 100, SP500, SP500, and sort of a composite market view. The yellow is stocks above the 50, the white stocks above the 200, and the orange are 50-day above the 200. Just look how the breadth has just rolled over across the marketplace. And when you look at AD lines, new high, new lows, percentage of new highs, all of this is weakened over the last several days. Now, rates turned down on what reason? Probably because of slowing growth concerns from some of the big box retailers. Perhaps it's because Austria is shutting down their country, and you could see the 10-year and the 30-year rates turned down on the week. AD lines, here's small caps, both the AD lines in white and the index in green turned down. And then you could see the AD lines on the Russell turned down. On the orange, it's still, and the index really hasn't turned down on the big caps. Not surprising, that is where the strength is in this market. Here's the NYSE, and you could see the AD line turned down, and notice in this blue, which is the Qs, and the yellow is the spiders. They're still hanging up at their highs. Bonds ticked up because of the weakness in interest rates. Now, breadth, I said here, quickly approaching short-term oversold. Stocks above the 200 had a big drop this week, as did stocks above the 40. If we look at the 12-week new high, new low, one of my favorite short-term reversal indicators, we're not really in reversal area here as we pull back quite a bit, but it's really, when you look at how much it's come, you realize 1 or 2 more bad days could be all it takes for us to end up in a potential reversal. Now, the other thing that's got me interested, if I look at on the daily McClellan, the signal that I'm looking at is the McClellan oscillator and how close it's getting to this yellow line, which has been a site of reversals. Now, this time we didn't even get to the yellow line and we reversed. So we'll see if it gets to minus 145. At minus 117, it's moving in that direction. Weekly, you could see also approaching it. The buckets, despite the markets, this is kind of interesting. The S&P 1500, it's sort of a 50-50 affair, meaning half the stocks are above their midline, their Bollinger Band, half are below. Yes, it's a little bit more below, but close enough for me. But when you look at where those stocks are, we have a lot of stocks starting to congregate at the bottom of their Bollinger Bands. Therefore, you might expect us to, in the next few days, get to that oversold bounce time. Now, Hindenburgs, and I'm going to talk about them for a second. These are things that Ian really popularized, and there's signals that occur at preceding major market corrections. Now, there hasn't been a major market correction since World War II that wasn't preceded by the Hindenburg Omen signals. 1, it could be spurious. 2, 3, 4, when they occur, you make sure the hair on the back of your neck stand up. So 1 out of 4 will be meaningful. Well, we had 2 in a row on Thursday and Friday. You could see in red here the new lows on the NYSE, and this is the classic place to look for it. Now, interesting, the NASDAQ, 1, 2, 3, 4, 5, 6 out of 8 days, and the number of new lows on the NASDAQ is growing quite a bit. So it'll be interesting to see if these are true and they foretell a big sell-off. Market tone, it's not horrible. We saw some red creep in, and no surprise it would be in the Dow Jones Industrials and the NYSE. but clearly weakening compared to where it's been over the last several weeks. And if you want to look at a tough week, this is looking at the ERG report versus gamer. ERG is EPS rank plus relative strength plus group rank, and everything is negative. Everything is negative. Yeah, it looked like as you got better growth, you were less negative, but everything was negative. Less negative with higher EPS, less negative with relative strength, but what a tough week. I had a tough week. Here I was down 0.24. S&P 500 was up 0.35. The IBD 50 was up 0.48. The big leader of the indexes that we routinely follow was the Canaries. Now the keepers, I forgot to look at those. Are they even in here? Let's see. I didn't include the keepers, so they won't be in here, but we'll take a look at the keepers in just a few minutes. Sector strength deteriorated. Notice we got some red popping up here. In fact, if we look at the Q tools, now this is looking at S&P 500. This is looking at S&P 1500. You could see that going back over 2 weeks, we've got more than half the stocks have been negative. More than half the industries, up to as many as 80% have been negative, and most of the sectors have been negative. If I look here at the intraday buckets, you could see the stocks below the lower Bollinger Bands are now approaching 10%. 20 to 30 is when I stand up, but it's something that will make me realize and think that, we could have a couple more days and maybe a reversal. Sectors for the week, only one were positive. I'm not surprised. It was a tough week, and in a defensive setting, it was utilities. Over 2 weeks, they're all negative. Over a month, though, there was strength in the market. So we've just weakened going into the last couple of weeks. With a weak market, not surprising, utilities are at the top. Perhaps it surprises me that staples and real estate were further down. But these were the top 3. I highlighted those because I showed here I'm looking at the industry groups, and let's look at the top 10. And these were the undervalued stocks using Sager's Q tools. And of those, the one that looked most interesting was already on my buy watch list, which was Micron, which has had a nice move over the last 3 weeks. Still has a ways to go before it starts to get close to its prior recent highs and really blasted off on Friday. Our canaries in the coal mine, told you they had a good week. They were up most days, and you could see they're still in a nice uptrend. And I said, are they the last to roll over? Or are they just a nice house in a bad neighborhood? The virtual stock club keepers index has really gone sideways, maybe sideways a little bit down, but it's still at the 17-day moving average and really has not, clearly shown us that it's rolling over. That's going to be my signal. If these roll over, then I know growth stocks, the type of investing that I do, doesn't work. Know your news and earnings. From a news perspective, we got some PMIs and existing homes, and just what we need on Wednesday is a big news day with jobless claims, GDP revisions, capital goods orders, durable goods, income, spending, inflation. My goodness, consumer sentiment, FOMC minutes. Wednesday could be a doozy going into the holiday. Now, earnings are slight this week. Here's a list of some of the main stocks that you might know. If as I say, down here, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So the S&P and NASDAQ, which have more exposure to mega cap growth, set closing highs this week. The Dow minus 1.4% and the Russell 2000 2.9% negative, which are more cyclical end of the week with broad declines. The broad market was slowed by lingering growth concern after Walmart and Target said they'll absorb inflation pressures to keep price down, aka less earnings. Cisco issued a revenue warning due to ongoing supply issues, and Austria reimposed a COVID lockdown. Because of a defensive mindset, we saw stocks like Apple and other mega caps set record highs. The 10-year bond dropped, the U.S. dollar rose, and the S&P IT sector finished atop the leaderboard. Despite the weak finish on the week, the broad markets remain extremely positive on the year to date. And we're at an interesting juncture. On the bullish side, we have a positive seasonality, but with rise in COVID, growth concerns, and Fed concerns, the market seems to be giving us clear warning signals. I take note of back-to-back HINDYs, but perhaps as we get more short-term oversold, we can see a bounce into the holiday. I have cut positions, raised cash, and although I'm going to look at stocks that might be bullish, I'm going to be very careful about how I play the long side, at least for the short term. Again, my mea culpa, those that sat through Rob's programs this week and then were disappointed when he didn't have the wealth charts deal that I thought he would be offering. Don't worry, I haven't forgotten you. And I'm expecting any time now to get my own special link. Enough of our people were there that Rob wanted to share an opportunity. Once I get it, I will email anybody that emails me that's interested. Now, the way he works is he does have these Wealth 365 events. The next one's in a few months, probably in January. That's what gives us best prices. But what he's offered for me to share is pretty good. Dr. K, we put in the board yesterday, also had a package for $7.99 of his seasonality tools and his Laguerre RSI, I believe for either TradeStation or Thinkorswim, certainly for Thinkorswim. And just remember to, before you buy, if you go direct to a site, to ask about the Hgsi opportunity or Hgsi doc. All right, enough of that. Let's go look at charts. So this is a weird resolution. So we'll see how my stuff behaves or doesn't behave. So the first thing is, let's go and look at the NASDAQ. Is it getting to the point of concern? So the NASDAQ is bullish. It's green. It's green on weekly and monthly. So the NASDAQ gets 6 points there, 3 daily, weekly, and monthly buys, and green in all 3 time frames. The NASDAQ is super, super strong. Now the concerns. We've got clear-cut MACD divergence dots on the weekly, and we also have a high jump bar that is now back up to 94%. Now, the last time we were sitting there on the weekend, it was 98.28 and the market turned down. So while most of the market, we have some concerns about growth, the NASDAQ is pretty much at a very extended level where I might expect a pullback for it to come and join the rest of the market. But, you know, things can go a lot faster than I think they can. So the NASDAQ is the one I'd be worried about. The S&P is at 69%, nowhere close, and you can see it's not even green. So the most extended on the market is the NASDAQ, so keep an eye out for that. And again, as I said, the stocks that I trade, when they fall, they can fall like rocks, and you need to be careful. Let's take a look at the major markets in Hgsi. I love this tool for my top-down review because of how fast I can do it, the way that it's organized, and I also like the fact that I can do this when I'm flying around with no internet access. And maybe I'll be going back to work, I'm going back to work, but maybe back to the air and traveling around to see customers. So what I like to do is I have to adjust all these because of the resolution. So if you bear with me a second, I apologize for that. During the week, I like to be pretty much a pure top-down guy. And what I do is I review the markets like we're going to do right now. And then I review the top 50, and I want to show you that. Every once in a while, I forget about that list, and my buddy Kathy reminds me because she's always using that list. And I think it's a list that really, especially for new people that don't want to do a lot of work or want some help, it's a great way to start. So if we'll start with on the top, and what I have here is a list of the major market indexes, and I have them ranked by my top-down view. Now, when bonds and utilities and the VIX are the top, you know you're in trouble if you're long. Interestingly, the NASDAQ composite, the FANG, is biotech, which has been horribly weak, starting to make a move, and the NASDAQ and semis are up there. And on the bottom, oil, ARC, small caps, Russell, ARC Innovation, Dow, NYSE, ARC, gold miners, ARC. So tough week for the big growth guys, including Kathy Wood. or at least a tough Friday, but for the most part, I think a tough week as well. Very quickly, let's just look at the major indexes and HGSI. Let's make this bigger. You know, the NYS, the S&P 500, nominal new highs, really going sideways now on the daily since the 5th, which is 2 weeks ago. Had a red candle high, so it had the highest high going back, but really looks like it's going sideways. Here are the Hindenburgs. We talked about them Tuesday, and here they are. Hindenburgs are worrisome. So does it mean we're rolling over? No. Pull back to the 17-day seems like a no-brainer. A pullback to the 50 is not out of the question. And frankly, how bad would that actually be for the markets? And then it can go higher into the year end. So that's the S&P. Obviously, it'll have pain if you have a lot of positions. The Dow clearly rolling over, took out a chandelier stop here, took out the 17-day, and looks destined for the 200. The Russell 2000, this is the one that was range bound for most of this year. And if I just look at the weekly and I set my line there, it's pretty much testing the top of the box. If it goes back into the box, that's not good. But we can see the Russell, like the Dow, is clearly turned back here. And then we'll finish with the NASDAQ, which we know is the strongest. And whether I look at the NASDAQ composite, still above all the moving average, was actually positive on Friday, positive on the week. And the NASDAQ 100, even more so. You can see the gap up there. Now, is that going to be an island reversal and the NASDAQ 100 is coming down? It's certainly possible that either if the NASDAQ rolls over, this market takes a dive. But if the rest of the market starts to heal, the NASDAQ 100 does not have to roll over just because we saw the Hindenburgs. Now, if there's strength in the NASDAQ, what lives in the NASDAQ? Well, how about the IBD 50 fund? Nope, it's pulled back with the Russell and the Dow. Is it broken? No, it's still at the 17-day. It's just weakened quite a bit. How about the microsector FANGs? Looks just like the Canaries had a mobile breakout from the squeeze. It's in a John Person buy right below the PSAR dot. Hard to be upset with the FANG performance. If I look at biotech, be careful of the ETFs because they don't necessarily have the same weighting nor the same constituents. Kind of flat here and kind of at the same place it bounced back in October. So would not surprise me to see a reversal here. And on some of my stock picks on the week and interesting stocks, not picks, biotech was there. Semis continue to be very strong. The challenge on semis is finding stocks in that category that are not way overbought in a market that feels like it's top heavy. If we switch now and look at the dollar, you can see the dollar had a good Friday after a little bit of a flag on Wednesday and Thursday. Highs closed at the highs on the week, and a rising dollar ultimately is probably good for the country, but it may not be great short term for your portfolio. One of the things that may be impacted on the dollar is gold, and you can see had a person sell signal come in Friday. That is a low close doji on the daily as well, and it ran right into the chandelier stop on the weekly. Gold miners, we know from a few moments ago, are weak, and you could see that they have failed at the 200. And silver somewhere in there as well, failed at the 200. And then oil stocks and energy have been clobbered. You could see the gradual pullback. It broke below the 50. It's got a weekly sell, and that does not look great for XLE and energy stocks. All right. Now what I want to look at, let's go to 07, which is industry groups. These are the market analysis groups, are groups that Ron Brown has created and maintained for a long time. We appreciate that because, heck, I use them every day. So we've got 174 groups. Let's look at 2-day up. You could see only 17. Let's look at 2-day down. You could see 10. So short term, there's a little bit more of the upside. I don't feel that this market has given me a big buy signal. On a longer term down, I got 73 down and I've got only 17 up. So narrow positive stocks, much more broader to the downside. Let's see if we see anything positive looking at the top industry groups. If we look renewable energy, Plug Power comes to the top. I'm not a big fan of this company, I guess historically because it's done this a lot where it runs up and comes down. But, you know, it's in the right place, and maybe I'm too mean. Mobile breakout, pocket pivot, and a kahuna. It's in a John Person buy signal. Pull back to the 17. Looks like it's breaking out here. If the market continues and oil doesn't fall off the planet, Plug Power might do okay. Another energy stock is Enphase, which is breaking out here. This one's run a long way. High jump is getting a little rich for me. There's a number of these that look good. First Solar, it's pulled back to the 50. So it's got a high close doji on the daily by my sense, if you go back 2 bars there. Even though it did it, yep, it shows you right there. The weekly high close, the weekly has had a reversal day on for this week where it pulled back into closer to where it opened, but it still had a down week. This would be buying a stock that's pulled back. I'd look for some evidence that it's going to move before I would jump in. Put this stuff back up in case there's some earnings stories to look at. And otherwise, Solar Edge, high base, looks like it's ready to run again in this group. Great earnings per share growth. And then one that's been beaten up that also looked interesting is Canadian Solar. Look at the kahunas, 2 pocket pivots, taking out its moving averages, a mobile breakout, and a squeeze. So this is one that looks interesting to look at its earnings per share growth. Green has been a place to be. These are some that I'm interested in. And you can always just do this, which I also have a position in, which is forget about the individual names and buy the ETF, which is TAN, which looks like it wants to take off as well. Automobile index, can you say Tesla? Tesla is by far the only one that matters here, not the only automobile manufacturer that matters, but this is what's driving this index. And you could see a pullback to the 17-day. And to me, it looks like it wants to run again. Now, I've been playing Lucid, which gave a lot of volatility this week, a lot less expensive stock. But Tesla, if I had to bet if it's going higher or lower, well, if the market's going to put money in defensive, high growth, high cap names, it's probably one that's going to benefit. On the retail discretionary others, GameStop, I'm not going to even mention it. None of the other ones stood out to me. Biotech, I mentioned some of these looked interesting. Moderna, you know, would I buy it down here? No. Will I watch it down here? Yes. Is it possible it's going to go back up and retest? You know, these things aren't going away. I'd rather buy it with a market cap of 60, but it was over 200 when I was sort of condemning it back here in October. So it's getting closer and closer to where I might have some interest, but not yet. BioMarin breaking out here. You know, when you look at the weekly, it actually looks kind of interesting here. Look at the positive convergence of the person market catcher here. Lower lows getting stronger. Big breakout here. Do the research. It's already run a lot, and that might be a problem. Novavax, this one similar to Moderna in the vaccine business. A break above the 200, that will be interesting. And this is market cap is only 14 billion. Of course, theirs isn't approved yet, at least in the U.S. Arcus is one who's got a partnership with Big Pharma. It broke out as they took a bigger piece. This is this is certainly on my list of biotechs to be taken out. It's already 3.3 billion, but it's probably worth 4 to 6 in a takeout. So this is one I'm going to be watching. Not sure I'm going to chase it here, but a pullback might be something that's interesting. Cassava Biosciences, don't know much about that one. Doesn't look that exciting. Hgsi, cheap one, big gap up and move, don't know it. If I don't know, it means it's probably not oncology. I do like Gilead here. So let's just look at this. Similar, you know, it broke above the 200, had multiple pocket pivots. Its weekly bongo went green. It's out of a squeeze. I just think that if biotech seems to improve, Gilead makes money, has got good earnings per share growth, trades at a teeny weeny multiple compared to other biotechs, looks more like a pharma multiple at 7.81 and pays a 4% dividend. I like Gilead. Analim, there are some analysts that came out and said it needs to be taken over. The other one here that I want to look at, well, Regeneron we've given a couple of times, and Regeneron looks like it's running again. So there's stuff going on in biotech that looks interesting. Next one now is generic pharma. I don't know this company. Something must have happened with Dicerna. I don't know if they got bought or they just had massive good earnings, but that's the only one above the index. That's the only one to look at. Other financial services, same story. Mira Digital, Bitcoin player pullback to the 50 and bounced. This and Riot both pull back with the Bitcoin pullback. They might be something interesting to watch going into this week if Bitcoin can turn around. Department stores, we talked about Macy's maybe last month at the stock club. And look at this thing. It just keeps on going. It had a reversal on Friday, but it still doesn't make up or disappoint the big move it had with earnings and continues to go higher. Again, do I want to chase this now? No, I'm not sure if the gains are not already out of it. Although if they announce a split of their online versus their bricks and mortar, that probably would give it another run. Steel and raw materials, Cleveland Cliffs. I own some of this. It gave us a update on Friday. Now I look at this, and why do I own it is a question. Probably because I'm a sucker for earnings. It's under demand. Hasn't really broken out or done anything yet. And it depends on how aggressive you want to be. You could buy it here if it trades above its current level. How about when it takes out the PSR and the 17? Or if you really want to be cautious, you'd have to wait for 10% more to take out its chandelier stop. I own some, and I think there's a good chance that this one goes higher, especially with the infrastructure bill that's been passed. Rio Tinto, no thank you. Next is life science equipment. COVID worse, diagnostic testing better. Danaher had a kind of a shooting star look, so I don't like that look. Let's see, Cardiff, nah. Verisight, don't know this company. I thought thyroid FNA analysis, not interested. Cadell, this is one company that benefits from the COVID testing, and you could see that it's really off of its highs. It was really a big runner early on in the COVID time. IDEX, a dog lab, love my dog. Flagging, down to support on the weekly. You know, the breakout here might be interesting. It's an expensive stock. Agilent, I like a lot. Agilent has gone sideways, just broken above their 50 in a squeeze. I liked it last week too. And then you could see we had a mobile breakout from the squeeze. POC pivots in a kahuna earlier in this week. It has not moved too far to look at. All right. And then last of the top 10, specialty pharma. And the one I'm interested in this group, let's see. EyePoint, don't know this. I bet it does things in eyes. That doesn't hard to figure out. I don't like this move here, but it's, you know, I don't know. Interesting pattern, too risky of a market. So it's just another in the animal world, veterinarian medicines. When you see my buy list, I'll show you the couple biotechs that really stood out for me. Ceres is starting to look a lot like Tandem did. It crashed here, then it's been going sideways, and now it's moved from 6 to 8 to 9, and it kind of looks like it's starting to form the right side of a base. You know, is this one that I might throw some money at? I'm going to do some research, but you know, it looks to me like it could be setting up. I need to know why it dropped here and why it gapped there, so I'd have a little bit of research to do before I jump into that. Now, I mentioned I let you look at my buy watch list, and let me again say this. This is a dangerous market, and these are for me to track and follow, not necessarily for you to buy. Very different meaning. So if we look at, I mentioned biotech, so let's look at the ones that I liked. Arcus, we already talked about. Buying tech, did break above the 50 here. Great earnings per share growth. 70 billion, so it's still high, but lower than Moderna, and they've got an approved drug on the market. I like the pattern. Bryacell, I have no idea what they do, but it's stepping its way higher and higher. It looks like it's breaking out here. Gilead, I already mentioned. And then Legend Biotech. When my partner is sending me an analyst report because J&J's got this drug for myeloma that is projecting giant sales, and I read in there that their partner and the ones who developed the drug is Legend Biotech, it makes me interested. So it gapped up on the J&J upgrade and the J&J review. It's $8 billion. That's the problem. It's already priced like it's being taken over. Meritor, kind of loose. I mean, I don't see anything tight here. Well, Apple, kind of a nice pattern. Apple is a flight to safety, though, I'm afraid. What else do I like here? A lot of stocks here. But remember, I'm not necessarily buying them. I'm putting them on a list so I follow them. Silvergate is a holding company for Silvergate Bank. I think they fund a lot of the Bitcoin stuff. Run up, pullback, breakout. This one looks interesting. It makes money under demand. Silvergate Capital. And if I want to look at pure patterns I like, Maztec. Breaking out above the 200 here. No overhead supply anytime recent. You can see the move up on the weekly as well. So there are things, individual stocks that look good. Playboy Group's an IPO. Always wanted to own Playboy. Now I can own the company by buying its stock. Big reversal day on Friday. This is an IPO, sort of a life cycle trade, so to speak. Are these great stocks? No, there are no great stocks. There are no great stocks right now. It's a tough market. But if the market turns around, these are some stocks I'm interested in. Canadian Solar, I showed you that before. Right here at the 200, a mobile breakout from the squeeze, pocket pivots in a kahuna. I think a breakout here would be very interesting. So I'm going to cut this one relatively early today. And I think the most important message is heed the Hindys. Heed the Hindys. Heed the Hindys. If you want just a brief history lesson, let's look at the NYSE. Of course, it's not called the NYSE, so let me go here to Scott Majors and probably got the NYSE. No, let's look at the S&P 500. We'll use the S&P 500. And let's open it up here. And let's go to just a simple view. And let's go back in time. So let's go back to 2007. You know, Ian always talked about these things called the Hindenburg Omen, and I learned to listen to what Ian said. And I'm sitting in Udaipur, India, on a boondoggle trip with work. And I go back to my room after a great dinner, and I see this red line pop up. And these were the first of the Hindenburg Omens that occurred, and this was back in 2007. What happened after these Hindenburg Omens? Not much, but if you go from the top to where it bottomed, what do we see? 20% market correction. Then, no bother, the market goes further down here, down to 120. So more than a 20% correction. Now we're in 2008, more than a 20% correction. So let's go back. What was the first signal we saw the markets were going to roll over? Now let's scrunch this up a little bit. And let's go from the Hindenburg day, let's make this red, to the bottom of the market. Just a 23.5%. All right, 23.5% market drop. And that's the S&P 500. I know because I'm a growth stock guy, when the market drops, I drop even more. All right, so then the market started to heal. Oops, it went down more, didn't it? That's right. So let's back up. Let's make it even smaller. And now let's look at what the damage was. How about 55.5%? Do you want to pay attention to the Hindenburg Omen? It's up to you. It's not up to me. I sure as heck do. Now let's go back a little bit. How about here? 2007. We got a series of Hindys. Ultimately, the market rolled over. Didn't give us as much of a drop, just 12%. Keep going forward now. Can you imagine you're getting ready to retire and your portfolio drops 50%? My wife would kill me. Hold on. You notice we haven't seen any Hindenburgs for a long time. We're now in 2010. Maybe they don't work anymore. And I know what happened. There we go. They start to pop up eventually, but we're seeing spurious Hindys. Spurious Hindys. Now we're in 2014. Double Hindi here in 2014. Now let me make sure the Hindenburg Omen I'm doing it the right way. Nope, they're both there. Good. Go back a little bit. So until we got to March of 21, let me see, let's go back to 2020. Yeah, that's what I wanted to show you. Notice February 2020, we started to see some Hindenburg Omens. And then what happened? 35% drop. Okay, when's the next set of Hindis? Here, not much of a drop. You could have lived through that. That was only 5%. Again, little drop in here. Remember, only 1 out of 4 is the real deal. Is this going to be real? Or is this just going to be a little head fake? Time will tell. I'm going to heed the Hindi. That got a little bit loose. I apologize for that. Have a great day. We'll see you next week. And thanks to my wife for letting me do this while we're on vacation.